something that I need.
Good guys, what's happening? Yes, trading has to be boring for you to earn money from it. That's the harsh truth about it, man. It can't be exciting. What's good, Sack Trades? How you doing, man? Who we got in here today? Kieran, what's happening? And you got a few people in. Yes, Christopher Morgan. Yes, okay. From boomer to daddy now. Good morning, all man. What's good? What's good? Espresso, what's happening? Impala. Bitcoin. What's good, man? My voice is all right, Sophia. It's all good. It's intermittent, man. It comes and it goes. So I've been taking the Manuka. And it's been soothing my throat, but I just need to keep an eye out. I'm going to use this weekend to really not say anything, and you're just going to get flashcards for videos. That's how I'm going to do it. Jaw the Bomb, how you doing, bro? Yeah, I got to look after the voice box. Billy Bob, what's happening? Love from Australia. What's good, man? What's good? Frank Edge, how you doing? AM for the States. This is it, man. This is it. We're waiting for New York. New York is, in essence, open right now. All right. It's the pre-market. So traders from all over the world, institutional funds, you name it, they're all having the conversation right now, trying to establish the zones and what's going on and what to expect. Now we're talking currencies, stocks, you name it. Everyone is getting up right now. Guys, we are now going into what we understand to be the best time of the day because of the amount of liquidity that's going to be hitting the markets. Okay. And this is the best time for us to actually trade. But the topic of today, guys, is to understand how to take advantage of cycles. All right. How can we understand cycles to help us in our trading? Because ultimately, if you're against the cycle, you're always going to get stopped out. All right. And this is one thing that a lot of traders do. They try to test their risk tolerance against the cycle. Don't do it. If you're in a downwards move if we're in a markdown phase, all right, where the market makers are realizing returns on their previous shorts and they build longs at the same time, if you're trying to counter trend that, your trades have to be, you know, in and out, fast in, fast out kind of story. Okay, because when you're trading against the trend, okay, you're going to get in a bit of a tricky situation, which is why I always say to you guys, always trade in line with the peak, because the peak formation is what starts the cycle. All right. So ADR stands for average daily range, my friend. That's what it stands for. Antonio, that's awesome. That's awesome. Okay, then. Yes. It'd be nice if you liked the video. Doesn't cost anything. But let's get on with it. So, for all the new guys passing through to the stream, all right, my voice doesn't normally sound like this, but I'm losing my voice very slowly because all I do is stream. Now, for my pattern watchers, welcome to Traders Reality Channel, guys. All right, we talk about how to understand how the markets really move. Okay, and we cover an array of topics which challenges a lot of conventional wisdom with trading. Okay, and you'll probably be surprised as to why they are challenging those concepts. Okay, so let's get with it, guys. Let's have a conversation and understand exactly what is going on with Bitcoin and cryptocurrency as a whole. So here we go, guys. Firstly, what I'm going to do is I'm going to talk about what's going on with price. Okay, and then we're going to dive into understanding the cycles. And once we've done that, that'll take us into the first half an hour of today's session. And then I'm going to dive into looking at a few coins and go through a couple of stocks as well. Because I know US right now, NASDAQ, New York Stock Exchange, they're all open right now. So now it's a great time to really talk about it. So let's understand the following. Last night in the Asian session, okay, so if you watched last night's stream, now what's really helpful, guys, is this. If you're new to the channel, okay, and you're trying to work out where to start, all right, whatever stream that you've attended, go back to the last one, okay? So go to the recent update and the recent upload, all right, and that will guide you and help you understand what's going on in the stream as such, okay? So for all of you guys today, when we go through tonight's stream at 10 p.m., make sure you would have watched this stream first, all right? Because tonight's stream will talk about how price played out, okay? So you could say that this is the projection stream as such. Where do we project price to go, all right? And then tonight will tell us if it's gone in that direction or not. So yesterday's stream, all right, that I done yesterday afternoon, all right, in the New York Open, we were waiting for a couple of things to happen, all right, and the New York session itself initiated a stop hunt rise and then it dropped price. Now, going into last night's stream, we said that the Asian session would do one of two things. It would either continue down with a move, or it would come back up and retrace to this 50 towards the 50 EMA and recover the vector candle. It did just that, and it broke down lower. Now this is a level 2 drop. We're waiting for a drop towards a level 3 now. So we've got one more cyclical move to the downside on the 1 hour time frame. Okay. Now, we always like to understand what Asia is doing. Asia normally reflects what price action is going to be doing throughout the day. So you can see Asia initiated a stop hunt rise. Okay, so they came back and they hit all the stops for all the guys who initially went short in the New York session and held their positions. All right, they hit their liquidation points and price was, of course, being hit into this zone right here, taking the liquidations and the stops so the market maker can capitalize on his longs that he built when price was dropping. Okay, now from that stop hunt rise right there, they dropped price, hit the low, and then they recovered into the new UK Brink session, which initiated another stop hunt rise, came back towards the 50 EMA right there, and then it's dropped down lower. Now, what do we expect from New York? Now, New York may do something. New York might actually initiate a reversal. Now, if that reversal comes in, they would need to break above the 50 EMA on the 1 hour time frame. The 5 and the 13 EMA would need to come up as well and cross over the 50 EMA on the hourly for us to even consider price is going to go higher. All right. But the general consensus is right now, ladies and gentlemen, is price is pointing downwards. We have a cyclical move to the downside. Because look at the touches of the 50 EMA. Price drops, retrace, hit level 1, drop, hit level 2. We are waiting for the level 3 break because price did actually come back into the range and tested it one more time. We are now waiting for Bitcoin to drop down further. Our point of interest is the 800 EMA on the hourly, which sits at the 200 EMA on the 4 hour time frame. Okay, that's what's really important about this move to the downside. It's a cyclical move to the downside. Now, let me just bring back a little bit of concepts, okay? For anybody new into the stream, when we talk about trading cycles, we need to understand what is a cycle, all right? Now, this strategy is taken from Forex, all right? On the principle of price trading on a Monday to Friday, cryptocurrency is 7 days a week. So we have to have a little bit of flexibility with this cyclical pattern that we wait for during a week, okay? So where we are right now, where we've come from, is we are at the midpoint of the cycle. Okay, so where we've seen an M formation. So if we bring price up, you can see that we are at this point right now. Okay, naturally, when we see that point in the chart, we expect price to drop down level 1, come back up to try and take out this previous zone, but show failure. That's what's happened right here, level 1 right there. Now let me explain to you what's going on in this zone right here for anybody new into the stream. Okay, yo, what's good, guys? How you doing? What's good? What's good? What's good? How you doing? Glad to have you here. Is there a cheat sheet for how the EMAs essentially represent a different number on the different time frames? No, but I will get that over for you. Okay, I will do that for you. I think it actually has been done. I believe if you go into the Discord, I think if you just type one of the commands, I think it actually does that for you. I don't know, but I'll get something over for you. Okay. Do market makers ever move against each other and compete in sort of a way, or do they work together? They are effectively in competition with each other, but they do work together, because Asia can move price in a direction, build up a certain commitment of liquidity, which they would then rely on the UK to either add to it or capitalize on that move. Because look, Asia, from what they did last night, oh God, what Asia did last night was the following. They started up the session and they moved price higher. They committed a number of traders in this zone, okay? And then they dropped the move. When it came towards the start of the European session, the European guys, they could actually see what Asia had done. So they understood that Asia is favoring lower prices because they broke down and then they reversed price back up. So when EU comes in, when the European session comes in, they've obviously got a decision to make. They can either add to the actual orders, in other words, continue with a retrace back up, okay, and then drop it, or they can just simply continue with the move straight away, okay? So what they do is they take advantage of the liquidity that Asia has committed and they add to it so that they can get their side of the money banked into this move. And then when the US comes into play, they can see what's happened. And then the US, in essence, is going to initiate either a reversal, stop hunt rise, stop hunt low, and they're going to throw the range about so that they then fulfill the commitment of what's happened in the UK, Europe, and in Asia. If you go back in the charts, ladies and gentlemen, and you'll see this sort of behavior, how Asia starts off with a stop hunt rise. There you go. Stop hunt rise, drop. They took out all the guys who went long here. They had built their shorts and they got the commitment right there. The European session does exactly the same thing. Initiates a stop hunt rise, build their shorts at the highest possible point. The US steps in and sees what's happened and they say, okay, there's a lot of money trapped to the upside. Let's get with it. Bang, they drop price and then they initiate the move to the downside. So this is why in this strategy there is the infamous New York reversal. Because the New York session itself is going to even move price from one point to the next. We sometimes get two reversals in New York. All right, let me show you where there is 2 points in the chart which they can reverse from. All right, so you've got, here you go. Here's an example, New York reversal. So the Brinks box brings price down, bounces the lows and moves back up. And then you've got another reversal at the highs and brings price back down again. So we had two reversal points. So New York really is the point in the chart where we need to pay attention. Now back to the topic at hand with the cycles. Okay, we can see that we've got the level one. All right, price had come down. Market makers had offloaded the longs. Okay, took out the stops for the guys who went long in this move to the upside because they brought the dip and then they moved price down. All right, Asia initiates their move. Price comes up. They drop to the level, recover the previous zone. Level 2, we are expecting exactly the same behavior, but it looks like they're taking a little while before they do that. We are above the 44,000 zone. Okay, so they are building their longs, building their shorts above key notable areas. So they'll try and push price up one more time before they try and bring it down. Now, at any moment, ladies and gentlemen, they can actually change the cycle. As much as we expect them to bring price further down and come towards the 800 EMA on the hourly, which is the 200 on the 4 hourly, at any moment they can change direction. Look at it from previous moves itself. Look at this. The M formation that we anticipated, which was consistent with the cycle pattern. We were waiting for a level 1 rise. We got the rise, but they also went into a pattern as well, and then they completely moved out of the zone. And you can see they took out that area. Okay, so something else about cycles, ladies and gentlemen. A cycle on the 1 hour time frame doesn't necessarily mean it's going to be the same cycle on a higher time frame. Okay, so if we bring up the actual higher time frames themselves, we look on the 4 hour time frame. This is what we're waiting for. We are waiting. I mean, the confluence of this has actually worked out in our favor. All right, but we are actually waiting for another drop to the downside to form the level 2 move. So this is level 1 retrace, continuation back up. We've now hit the level 2 high retrace, and then we're waiting for the continuation from that point. The retrace, ladies and gentlemen, is going to be quite important because we won't know where the retrace is going to start from. You can see on this time frame right here on the 4 hourly, the retrace start of level 2 came below the 50 EMA, took out some pools of liquidity, and then it shifted out of the zone. Okay, we are waiting for that second setup right now, which if price does come back down to the lows and it hits the 200 EMA, we will then get a bounce off the 200 EMA and make another move to the upside. How far that move to the upside will be, we won't know until it actually happens. Okay, so there's no point in me projecting, saying to you, yeah, Bitcoin's going to go to 55,000 until it shows me the belief that it is going to go up to that point. Then I'll start making those claims of the chances of price getting to that zone. Okay, now where we at? That's correct. Hader, yes, that is correct. You have to wait. You have to wait until momentum is favoring higher prices. Because look, what have I said to you guys about the clock? You know, in order to determine momentum in the chart based on the 50 EMA, what direction is the 50 EMA pointing in? Is it pointing in 4 o'clock or 5 o'clock? Yeah. If it's momentum to the upside, is it pointing 1 o'clock, 2 o'clock? This is what we're waiting for. Right now, you can see today has been a little bit of a quiet day. All they've done is manipulated zones and just consistently hit the intention of the Asian session. Asia did it. UK's done it. We're waiting to see if the US is going to do it. Okay? For price to continue higher, guys, we need the 5 and the 13 EMA to break through the 50 EMA. Until that point, if price is to go lower, we anticipate the 5 and the 13 EMA to expand. You're looking for expansions like this. That's what you want. Because as you get an expansion away from the moving average, you're then naturally going to see price moving in the direction. Okay, that's what we're effectively waiting for. Right. Half Moonboy expecting 12 o'clock. What's going on here? All right, let me read a couple of your questions here. All right, Greg, if all the EMAs are below the 50, what kind of signals do we look at if everything is already below the 50? Expansion of the moving averages. Because look, the 5 and the 13 EMA are close together. We want expansion. Can you see that gap right there? That's what we want, because that implies volatility. Yeah? This is what we're waiting for. Raju, why market makers need to come to close the position they opened? Why can't they close with profit and keep moving? Big fan, started to understand the business model. Thank you, Tino. Okay, Raju. Right. We need to stop thinking that the market maker is going to be rational. Okay? Why they can't close with profit and keep price moving. So by that principle, you will be seeing price continuously doing this. It will be another AMC. Okay? The reason why they move price in this behavior, ladies and gentlemen, okay, is because every time a candlestick is formed, or should I say every time an order is achieved or matched, the market maker takes a commission. All right? So he gets paid, he earns off fulfilling people's orders. He also uses his money and matches it with other people, okay? And he gets commission off that as well. And he also sees profit on the positions that he's built for himself. He also takes money off the traders that he's built positions for, okay? It is just a money-making machine for them. They are liquidity providers. When you're providing liquidity, when you are giving money in exchange for something, you're going to get the rewards back. Look at staking. You stake in cryptocurrency, you commit a certain amount of money into staking, you are rewarded with a certain percentage, an APR of X, Y, and Z. And you anticipate a return and watch your account grow based on your investment, okay, on what you staked. The same principle applies with the market makers. Now, the reason why we see this fluctuation in price is because people put money in different places, okay? Now, the market maker wants to capitalize on every opportunity he can. Remember, the markets move based on the liquidity that he provides, okay? Now, if there's no liquidity, there's no trades, all right? There has to be an even source of equilibrium as such in terms of trades, because you can't have a retail trader supplying a retail trader. What if I place an order and I'm having to rely on another retail trader to match the liquidity that I've put in? It may not be the case, you know? So that's when the market maker steps in. He comes in and says, I pretty much have an infinite source of liquidity to match every single order that is placed in this marketplace. Okay? pay me my commission for initiating that transaction. Now I'm going to earn money off what I understand about where price is likely to go next. You know, but the market maker also has to realize a profit. He's got targets in place. He can't just be giving money away all the time, you know? Okay, then. Right. Tino, candlestick meanings again real quick, please. Candlestick meanings. Okay, so the green vector candle, by principle, we understand it to be a strong move to the upside. But what we know is behind this candle is the market makers building shorts at highest possible point. At the highest possible point. Okay. Likewise with the red vector candles, we know that this is the market maker is selling off, but it's also the market maker building longs at the lowest possible point with price to come back to that point later on. Just look at the red vectors building their longs at lower prices, coming up, realizing a bit of a return, taking advantage of the guys who went short. All right. Retracing the liquidity, retracing price back towards the liquidation points from the guys who went short. Okay. They make one more hit to the downside, get some more longs filled at the lowest point because they've committed enough liquidity in this zone. And then they reverse price all the way back up and look at where it finishes. Green vector candle straight up in the same, near enough to the same zone as this red vector candle where they initially started the change of the vector. Okay. The violet candle. All right. So that violet means that volume is starting to rise to the downside. The red candle means it's at its highest point. So that also implies that they're building longs at lower prices without so much aggression as opposed to the red candle. And the blue candle acts in the same principle as the green candle, which is prices starting to rise, or in a sense the volume or price exchanging hands is starting to rise, which means that they favor shorts at higher prices. So I hope that helps you there, bro. Okay. Yes, and this is it, guys. The understanding of this indicator is all psychological, okay? Don't come to this stream thinking that you just trade off exactly what the vector candles do. You'll get caught out because there have been so many instances where if you think that price is going to recover one candle against the next and just hope that whenever you see that candle, it's going to do it, you could get caught out, all right? So here's an example. Let's just have a look here. Great example of it. Here would be an example of it. Okay, so you see this green vector candle, all right, and you're thinking to yourself, yeah, it's going to come back at some point. You see another one, you think, yeah, it's going to come back to it. You could be going short in this area here, okay, thinking that's going to happen, and then they spike price back up and throw you off thinking, hold on, are we going to have another move to the upside? Okay. So you're thinking to yourself, oh, I better get out now because I'm actually seeing the prices dropping. They may not recover it yet because this green vector candle has appeared. Right, I'm going to go long. Then straight away they drop it back down again. All right, and throw you off. Price does then come back down, and then you hold this trade because it's broken the moving average, and you're then thinking, okay, it's going to continue lower. But that's not the case because you didn't get the clear confirmation that the 5 and the 13 EMA would give you, which is a breakdown below the 50 EMA on the hourly, which would imply price is going to come down. But then when you wait for a little bit, you see that eventually it does set and take the liquidity. Okay, what your goal is with these vector candles is to understand the structure behind price. If we are in a cycle, are we in a level 1 or a level 2? For us to understand what was going on at this point in the chart here, we understood that we wanted a level 3 rise to the upside. Now, because we had 2 hits to the high right here, price didn't actually show us that move to the upside. So we knew we were expecting yet another move to the upside. So we know that at some point they're going to come back and recover these red vector candles when price was dropping. At the same time, they're recovering the previous candles from the previous move up. All right. So we know with the cycle, we expected a final move to the upside, and we got that move to the upside right here. Didn't last too long. But what they did was they hit it twice, which was the start of a new pattern as well, okay? Which is where we expected the pattern to form. And it's funny how pattern did form in this area and didn't go any higher, which then supplies to us the understanding that we are at this point right now and we are expecting a cyclical move to the downside, which we are halfway there, guys, okay? Drop, retrace, drop, retrace, drop. And that's what we're waiting for right now. The fact that New York right now is holding this zone. I mean, we do actually have another 20 minutes, 25 minutes until New York actually opens. All right. And then we have the futures market. We may start seeing a little bit of activity. Okay. Well, Andy's, well, it's not, yeah, everyone has a different color coding on the vector candles. Ultimately, if it's red and it's just clear as day, then fine. I mean, this is what I use. I use TradingView, and I also use MT4. MT4 is where I base 90% of my decisions on my trading, because I trade on this platform. Okay, the reason why I trade on it is because it's very, very cheap to trade on. All you pay is a spread to open and close trades. That is it. All right. You can pay commissions, but they're fixed commissions and they are next to nothing. But when you're opening and closing trades, like, there's no such thing as a limit order or a market order. You can set market orders. You can set a buy stop or a limit, but you're not penalized the same way you would be penalized elsewhere. All right. So it's cost effective, but you're not actually trading the asset. You're trading the contracts for difference. Okay. So you don't get taxed on this sort of thing depending on where you are in the world, which is why I like to stick with Forex, because Forex really is it's tax free, because they deem it as gambling. You know, it's a category of gambling. It's speculative investments. That's what it is. For my Forex guys, you can see what's happened right here with dollar yen. So it's done exactly what we needed her to do, which was the development of this W formation. We waited for them to retrace back up, which they did, and look at the turn, just slightly above the previous red vector candle, the recovery, and then they've dropped price one more time. With this drop in price, we need to look at gold. Gold is now held the 200 EMA on the 1 hour time frame, which is the 50 EMA on the 4 hourly. So that's really important right now. Are we going to get a continuation up to gold and take out this previous pool of liquidity? That's the question. Depending on what the news announcements is like today with dollar yen, I mean, across the board, there's not that much news coming out other than a couple of bits of some just small reports. Let me just get the calendar up for you, and you can see where we are. Thursday, this is where we are, guys. So we're getting the unemployment claims, and the Philly Fed manufacturing index is coming out, or it's actually come out. Okay. So unemployment claims was actually less. Okay, so that's good news. Okay, but yeah, we're waiting for these next mortgage delinquencies. Nah, that's not really anything I can do anything to them. Yeah, so it's just really, it's been a quiet week for trading in dollar yen as such. There's not really high impact news. They had them all in the week as well. But looking at cryptocurrency as well. See, this is what, when I say to you earlier on about liquidity. Okay, what they used to do on Forex Factor, I don't know if it's because I'm not signed into it, but what they do is they tell you the percentage, okay, of the liquidity that's in the marketplace at the lows right here. So it usually would say above 265%, 300%. It shows you that, which is really good to know. You know, when you trade in these sort of zones right here, that's what's going to help you understand liquidity, so that when you're trading, you know that you're in with everyone else, okay, and you're not getting caught out with low liquidity moves. Okay, let me just flip over to Cryptocraft and see what news is being discussed across the board. Crypto world shows signs of being rather bullish. I hate that word. Retail central digital bank, CDC implications on Thai financial sector. Okay, so what I like to do with this is, what information are they giving the retail trader? I don't look at this to say, oh, what do I want to know about it? Okay, but what are they giving the retail trader? So look, titles like this: Ethereum to exceed Bitcoin's value within 5 years. That's a statement. They're implying that as a fact. So what's the retail trader going to do? He's going to put his money in Ethereum, man. He's going to get rid of Bitcoin and he's going to put his money in Ethereum, because this article says that Ethereum is going to exceed Bitcoin's value. You know what? If it does, happy days. You know, that's great. All right. But look at what information they're giving people. People are responsive. They are so impressionable. They will take that as face value. Okay. Do your own research. Go to the price. If you think it is going to go in 5 years, surpasses Bitcoin. I mean, we got 5 years, man. That's just too long. Okay. And look, Coinbase traders have far more love for Ethereum than Bitcoin. It's like everyone's pushing the idea of Ethereum, NFTs. It's all working for the favor of Ethereum. Okay. So this is what you want to try and do, guys, when you come across this sort of thing. All right. Look at what the retail traders being shown. Okay. And then come to the chart and see if that is being reflective. Okay. So let's look at the altcoins. Let's see what's happening. So not that many altcoins are moving. All right. We've got a couple of the winners still. Algo's pretty much trying to break above $1. Here we go right there. The New York futures market opens at 9:30. Yep, the New York open. When I say New York opens at 9, I'm talking about the banks. Everyone starts to exchange their money at the bank. The process of banking starts at 9 a.m. every day, near enough, around the world. That's what I mean about the New York Open. And when I say the New York Open as well, it's the start of the US Brink session as well. All right, so if you look here, you're going to see in a short moment the Brink session starting. So if I zoom in, and you'll see right here, the Brink session is going to start very soon. It will appear in a short moment. You'll see this big green, big red bar. Okay, and that's the Brink session starting very shortly. All right, so in the next 20 minutes, we should see that turn. Okay. Since the drop, okay, Ahmed, dear Tino, I am looking at last night's drop as a level 1. Since the first drop didn't break below the neckline of the M formation above it, is that fair to say? Yes and no, but look, the thing is, when you're dealing with variation on the theme as such, okay, there's no right or wrong answer. All right, so if you consider the following, M formation, let me bring this up so it's easier and clearer for you. Bring up that. All right, here we go. Level 1 starts, okay, when the high is hit. That's where it starts. In order for it to complete, it needs to break below the last consolidation. Okay, that's where it started. The consolidation started here. Okay, they bounced away from it. In order for us to verify a level 1 rise, okay, and drop, we need to see it break down below the previous consolidation. All right, to base it off the neckline, all right, yeah, I understand why you're basing it off the neckline, but you're taking the principle of head and shoulders into the game, okay, which is fine. All right, but what you want to pay attention to is the fact that the cycle itself favors lower prices based on what we can see in front of us. Okay, then if it takes out this zone, whether it takes this point here, I mean, this move down, it doesn't have to break the neckline to validate as a level 1, okay? What you want is the last attempt to the upside where they make the traders believe that it's going to continue higher. Look at the notable volumes that appear in that zone, okay? This was the last attempt to bring the liquidity back in to make them believe that they're buying the dip again, all right? And that the 200 EMA was acting as support. 1, 2, 3 hits. Traders try to go long at the support of that, or they get squashed out, which is exactly what happened here. Spiked the high, brought it down, tested 200, stabilized, made the retail trader think, yeah, we got the third touch of the actual 200 EMA. This is now a support zone. Happy days. They get in long. Price ends up spiking higher, convicts the retail trader that it's going to continue higher. And then it brings it straight back down and completely annihilates the range and takes it clear. Retraces again, level 2, does exactly the same thing, and then they drop price lower. Now we're just waiting to see what New York is going to show us with this behavior in price. This stopping volume candle closer towards the highs of price and the rejecting of the 50 EMA is one of the clues, ladies and gentlemen. What we're waiting for now is the 5 and the 13 EMA to expand, because they crossed over here and they're just doing this slide-like motion, wavy motion to the downside. That's what we are anticipating. Before we can assume price is going to continue higher, 5 and 13 EMA need to cross the 50. We might even get a little move like this from New York where they'll spike up and then they'll drop it. Don't fall for the hype. Because naturally, we've got this pool of liquidity right here that hasn't been taken yet. So look, you can see it started there. They recovered that zone right there, and they haven't recovered this point right here. So this could be a point in the chart that they may send price back up to, test the 200 EMA, and then pull it back. That's what we could be seeing, guys. All right, then. Just looking at here. Take on Matt. Let's have a look at Matic. Okay, I'm going to go through a couple of the cycles on the altcoins. Let's have a look at Matic. There's Matic right there. See, look. Consolidations. All right. Here is a head and shoulders pattern, which is disguised as an M formation. Drop level 1. Drop level 2. Now we're waiting for the drop level 3 peak formation. That's what we're waiting for. That's Matic Network right there. All right. Uni Swap. Let's have a look at Uni Swap. People want Uni Swap. Let's have a look. Oh, is it Uni? There you go. Same. Quite a bit more volatility from Uniswap, to be fair. A lot of volatility. It's probably one of the first, so far, it looks like one of the first coins to come down towards the 200 the 800 EMA. That's crazy. That's quite a volatile coin then, for them to do that. Look at that. Quite volatile. So we're waiting to see if they're going to hold this zone. New York's going to reveal it all, ladies and gentlemen. Luna, people losing it for Luna. Luna best be doing it good, man. I will not be happy if Luna ain't going anywhere. Okay. There's a little projection, happy days. W formation at the 50 EMA, price rises up. She's done just that. Now it's testing the 50 EMA. What you want to do, guys, is you want to focus on the coins that are actually holding very well at key points in the chart, and everything else seems to be dropping. Okay? So you want to focus on those coins. If you notice, we've got a bit of a habit right here. Sushi, Algo, 1 inch tends to be, and Ava tend to be the coins that, and FTM seem to be the coins that have the top spot all the time, or always trading positive. All right? Keep an eye on those coins, guys, because when Bitcoin and Ethereum start making their moves, all right, where all the money starts hitting the bigger coins, these guys are naturally going to continue with their move. So here's the lighter fractional disparity, guys. When the big majors are being held, okay, and the altcoins are rising, everyone's putting money into altcoins. If the majors start moving and the alts will continue to move, then that's one lighter fractional disparity. Or if the altcoins hold and the majors move, we are trying to establish what type of disparity we are in amongst the coins themselves. And it's clear that the altcoins themselves are the ones that are moving, whereas Bitcoin, Ethereum, and even XRP are just not really doing great. So here's it, XRP, great. Big green vector candle at the 200 EMA. That's important. But the problem that I've got with this is at the start of a new hour candle, is this green vector candle going to get recovered? Because price is below the 5, the 13, the 50. All right. It's tapped the 200 EMA, tried to bounce away from it, triggered the orders to the downside, comes back up and hits the liquidation points for the shorts. And then when New York starts, we should see the recovery of that candle. Because if they were going to move away from the 200 EMA, they would have done it with this move here. But they knew they could trap enough traders and think they were going to take advantage of buying the dip. All right. So they squashed all those traders in that zone. BNB. Let's have a look at BNB. I can't even see BNB. Wow. There we go. BNB 406. There you go. BNB's doing pretty well, but see, what I don't like is these vector candles that appear here below the moving average and not going anywhere. All right, it's just literally like a little bit of a fake move. I don't like it. All right, I don't like that. For me to grant that they are going to go higher, the 5 and the 13 need to cross over the 50, and the strength has to be there for that. Because if they don't, then we know where we're expecting price to get to. Okay, let's have a look at a couple of stocks that I pulled up. Tesla, let's see what Tesla's got planned. Okay. Okay, then. So recovery of that zone. We've got this big candle green. We've got this vector candle right here, which may be a point in Tesla that they may try and bring price back to. Okay. They may try and retrace back down and try and recover this blue vector candle before they come back up. But you can see the volatility of Tesla itself, how it moves up and down. Look at these spike up, spike down. Okay. So I understand what's going on in that aspect. Apple, let's have a look at Apple. A lot of gaps. See, this is the problem with trading stocks, man. There's a lot of gap plays. All right, exhaustions in price because pre-market and after-hours market trading. Okay, look at that. That is a gap that may likely get filled. All right, it may get filled. So we're going to highlight this zone. Give me a second, ladies and gentlemen. Yo, sorry about that, guys. Okay, then. Let's have a look at Barclays. What is Barclays doing? Not so great. I'm going to have a look at XRP again. I'm going to pull up XRP. Where are you, XRP? XRP. See, wait, where is it? 10 more minutes until the next hour. It's already starting to break it down. Let me drop to the 15-minute time frame. There it is. There it is right there. So 5 and 13 EMA right there. Okay, bit of an expansion. Okay, but now it's trying to come back in and then what? Continuation down. So at a very important point in the chart, you can see on XRP, the 15-minute time frame, we've got pool of liquidity at the lows below the 800 EMA on the 15-minute, which is the 200 EMA on the hourly. So bring that over here, and it's this zone right here. See, when you don't see a vector candle on the higher time frames, go into the candlestick and find if you can see any more, because there's a good chance that they're going to bring price back into that zone. Just look at how they marginally come back down to this point right here. All right. Even though they recovered it and bounced away, they came back into that zone again. All right. Why are we in the 45-minute frame? So many vectors. Let's have a look at 45-minute time frame vectors. Where are we seeing vectors in the 45-minute time frame? Never really paid attention to the 45-minute time frame. There you go. Look at that. Past 45 minutes, they've been building their shorts at the highest point, and now it's looking to come back down. See, look, the last bit right there, recovery. 9 minutes time, we're going to see New York come into play. Just looking across it. Let me have a look here. So will the current W on the 50-minute Ethereum work out? What do we think? Let's actually look at Ethereum. Ethereum has actually broken below the 3,000 zone, which is really important. All right. So they've built their shorts, built their longs. Sorry, they built their shorts above the key 3,000 zone. So look, built some shorts up there. And ran them through again. Some more shorts right there. Ran them through. Retrace. Continuation down. Problem we got, guys, is the 50 EMA is pointing very sharply to the downside. Even on the 45-minute time frame. Bring up the hourly. You can see it bright as day. It's such a strong move to the downside. Yes, the 200 and the 50 have crossed over. So the death cross traders, all right, are probably feeling a little bit excited. All right. But just look what happened when they saw the death cross happen right there. Look at where it's aligned. The death cross appeared right here. All right, traders went short. Market makers stepped in, induced the traders to go short, and they snapped price all the way back up again. All right, and took out all the liquidations and stops for the guys who initially went short by simply looking at the cross right there. Be careful when you trade those death crosses and gold crosses. What you want is you want to see the moving averages expand out. You want this to expand out for you to solidify that this cross is going to play out. All right. 5 and 13 EMA on Ethereum are starting to widen out. We need to wait for New York, so we will then understand the intention. We are at the lows, guys. We are at the lows for the session. Yesterday's low was right there. They're likely to take that zone, but the week's low, last week's low is right here. So that could be a point of interest in the chart, guys. Very important. Yes, you can use the vector candles to take profit. So for example, if you're going long, all right, you say you're going long on this zone right here. Say you went long right here, okay, and you're riding price. Just know that when you see a vector candle appearing at the highs and it's away from the moving averages, all right, just know that that could be a point that you could take profit from, all right? Because then you're getting the best possible feel from that vector candle. Now, granted, it does look like it goes up a bit more, but who cares, all right? You didn't have control over that, all right? So, yeah, you can use the vector candles as profit points. There's nothing wrong with that. It's only how you understand the vector candles themselves, all right? To be fair, I don't really look at Bitcoin pairs because it's like, look at ADA, okay? ADA right now is, look, vector candles to the upside. Are they going to bring price back down? Okay, which looks like they have done. Are they going to hold the 50 EMA? Is the 5 and the 13 EMA about to cross and start doing the favorable move to the downside? Or are they just going to continue back up? Are we seeing effectively a mini pattern here? Look, guys, you can see on ADA, we've got drop, retrace, continuation, rise, retrace, up it goes. So that's potentially where it could end up going. But who knows? We need to wait and see. New York are coming into play very shortly. 5 more minutes until New York, guys. For a short, Atai Gary, here we go. For a short trade, you may treat the death cross as a golden and the opposite. Don't play that game. Don't play the game of just simply thinking, okay, because the retail trader thinks that's a golden cross or death cross, I'm going to trade against it. Okay, because sometimes they do actually work out. Okay, but just look closely. At this point where the chart crossed over, okay, price was actually rising. All right. Then the next candle solidified that. It spiked up higher. Now, if you were to trade the opposite and be like, yeah, golden cross, okay, you would have realized a little bit of profit, okay, but then you would have been stopped out if you held the trade. And it would have continued down lower and then it would have spiked up again. You would have been committed to the trade because you can see the big spike of that red candle right there. And then price drops again. So it's throwing you off by you doing the opposite of what you see on the death cross. What you want to do is you want to use the death cross as a point of reference to help you understand the market maker's behavior. So if the market maker is seeing people going short on this principle of the cross actually occurring, look down and see what is the retail trader thinking at that point. So you would say to yourself, he's probably going to be going short at this point. I need to see market makers solidify that intention, which is where you see them breaking down price and trying to push it lower. But because you've got a red vector candle, it looks like a stop hunt low. And then they're getting ready to come back up to trap all the traders that initially took the trade on the death cross. I hope that puts things into perspective for you. Audio. I know audio's done some pretty decent moves. Here we go. Audio's doing pretty well. Look at that. Green vectors appearing at the highs and at the pullbacks of the 50 EMA. All right, so we need to wait. Guys, we can't do nothing until New York opens. I think I've picked the worst time to trade today, to stream. How safe is staking in general? Listen, there is nothing guaranteed in anything, guys. All right? But, you know, staking, in my opinion, you know, I'm aware of the risks, and that's the nature of the game. You know, if you're thinking, you know, of investing somewhere, understand what you're getting involved in. And if you're not okay with the risk, then it's not for you. You know, come away from it. No worries, Ahmed. Okay, ICP. Let's have a look at ICP. I know some guys have been rolling on that one. Here we go. ICP. Nice. Okay, this is pretty decent. Here we go. Look at that. Look at that, man. That is crazy how they're forming the pattern right there. Look at where they stopped, man. That's crazy. So they've brought price back down. Now we're starting to see notable volume coming back up. So it would help if you guys went round and looked at the coins that are actually performing, okay, that are outperforming the way Bitcoin and Ethereum are moving. All right, keep an eye on those coins, and then when the markets tend to turn, it's these coins that are going to make the crazy moves that we're going to be saying, have you seen ICP? They will be building up the momentum. All right, because that's exactly what's happening right now with Bitcoin and Ethereum, man. They're doing their hardest to just hold this zone, or they are testing the waters to either break down lower, okay, and then get some more longs filled at lower prices before they actually make a move back up. Any move from this point right now back up is going to be a fake move, guys, so don't fall for it. Do not fall for the move, because it has to be a progressive move. You have to see moving averages converse together, all right? You can't just take a trade purely off the basis of them just sending price up. All right, because that's what throws traders off. If that is the case, whenever you see that behavior, wait for the retrace. If there's something you take away from this with cycles, it's the retrace that is going to determine whether or not the actual cycle itself is going to play out. We are trying to establish on Bitcoin right now if this level 2 drop, okay, is going to continue to break to form the level 3 cycle to the downside. All right. Now, we've got this zone right here with Bitcoin. You can see there's a W formation forming on the 5 EMA. All right, so that is like a promising thing because the last time we saw a W formation on the 5 EMA, all right, was here. And then look where she went. She made a nice move to the upside. All right, is that going to be the same case right here? Are they finished with the cyclical move to the downside? I don't think so, because they haven't tested key moving averages where notable interest is going to come in, where people are going to step in. All right, you can see orders are being stacked at the 40 zone and even lower as well. And sorry, higher as well. So that's the basis of where we are right now. 30 seconds till New York brinks. How can we use the 15-minute to confirm a move on the hourly? Okay, how do you use the 15-minute to confirm a move on the hourly? Okay, so here's an example of it. So you can use this. So this was the retrace back to form the level 2. Price fakes out and moves price higher above the 200 EMA with no follow through. They then spike price one more time to trap the retail trader on the belief that the 200 EMA is broken. Okay, and then they bring price back down again. You would initially go short in this zone right here, only because of the understanding of the candlestick. Why? Because if you see what happened there, okay, and you go back in time, you're going to see exactly the same thing again. Where is it? One move right there, spike up. If you go onto the hour time frame, you're going to see it bright as day. There it is. Green vector candle to the upside, spike up, and then snap price back down again. All right. So that should pretty much answer your question about the entry point. Here we go. New York brinks. Here we go. Now the party begins, ladies and gentlemen. Where is the intention? Let's have a look down on the 1 minute time frame to really establish what they plan on doing. Ooh, don't like that. I do not like that. Here we go. 1 minute time frame, ladies and gentlemen. We're waiting to see the brinks itself. Where are the zones in price? Let's have a look. We've got the zones here. Okay, daily open is in sight. They may test the daily open and pull straight back from it again. We have got range daily low, which sits at 42,500, the whole number, the halfway point. Okay, so that is a very good point of interest. I'm waiting for one fake move to the downside, one more spike to the downside to induce traders to solidify and commit their shorts, which will then be consistent with price coming down towards this previous pool of liquidity that they've been building from the back end of the 6th of August. So then that should be where we are in terms of price. Let me just zoom in on the 5 minute time frame and let me see. Here we go. How can we see the cycle play out and break down price so we can understand what to expect from the market makers? So yes, we do have the daily open. They'll come and test the daily open because to recover previous pools of liquidity right here, and then they should, by principle, break down price. Okay, that should be it. Stopping volume on the 1 minute time frame. Here we go. There you go. Green vector candle. Fake move to the upside. Now look what's happening. Just look at what they're doing right now. This is the market maker play as such. Okay. I will, Risto, I will talk about that. I just want to keep this stream just to bring everyone into the US Open itself. How do you get the candle to look the way they are on your chart in TradingView? Okay, so for anybody new to the stream, ladies and gentlemen, be sure to like and subscribe, all right, because I talk about how to use this strategy. Now, if you want access to this strategy, you can get it for free. There are 2 versions of it on 2 different platforms. You can get MT4, all right, which is originally where it came from, and then you've got TradingView, where it's the code been put into TradingView, okay, which is the same principle, all right. Now, you can get everything you need in the links in the description, all right? But be sure to hit the Discord up because that's where everything is. These indicators are free of charge, guys. They don't cost you a penny to get, all right? You can just download them, and if you search Traders Reality in the indicators right there, Traders Reality in the indicators, you should be able to get everything, okay? Don't you get tired of repeating the same things over and over again? Yeah, bro, I could never get tired. I could never get tired of repeating the same thing, because I come to the charts and the whole point is to try and find a repeatable pattern that you can exploit. Is that not the goal of every trader, to get a pattern, stick with it, and just trade it when you see it and become a master of that pattern? That's exactly what we're all trying to do here, ladies and gentlemen. We're trying to master patterns, all right? And if we can pull off a pattern before it becomes a pattern, well, boy, you're getting cheese, man. You're getting cake. That's the basis of it all, guys. You know, that's what you're waiting for. You know, that's what it's all about. Right, guys, I can feel my voice starting to go yet again, okay? I'm going to end the stream right now, guys, but I want to thank you all for passing through. Again, be sure to like and subscribe. Let's get some love in this stream, and I will be rolling out again tonight at 10 p.m. GMT to establish exactly what we are expecting from the New York session, okay? Final time, expecting a stop hunt rise and initiation to the downside. Remember, if price is going to go higher, you want to see the 5 and the 13 EMA cross over the 50 EMA with strength and conviction. If the retrace comes back up, all right, and it starts to destabilize, as long as the 5 and 13 EMA are still below, then shorts may be something that could be considered, but it all depends on what the 5 and 13 EMA do right now, all right? So, guys, have a wonderful day, and I'll catch up with you guys later on, okay? Take care of yourselves, guys. Mad love, and I'll speak to you soon.